Hello, welcome. This is Seewing Yee from the Yee Real Estate Network. Welcome once again. And today's podcast name is Forget About Real Estate Flipping. Do this instead. So without further ado, let me share the screen and let's begin. So here we are. All right. Right. So a few months ago, of course, over the years, have bought many properties, investment properties, but I like to direct your attention to what I'm doing, which is fascinating. And yeah, to me, I don't know, but since I've been doing it for so long, for almost 20 years of investing in real estate, buying multiple properties everywhere, I just want to highlight and share this unique situation where it's really happening for the past, especially for the past 24 months, ever since the pandemic crisis has began. So as long as the insane, crazy real estate market is going on, you can still achieve this type of strategy, but it's not going to be it's not going to sustain itself. This strategy may sustain itself for perhaps another year or another year and a half, but then it'll go back to normal kind of investing. So you don't know what I'm trying to say, right? Bear with me. Okay, a couple of months ago, I purchased a pre-construction property, in this case, a fourplex in San Antonio, Texas. This fourplex, 4-unit, I decided to purchase for great reasons. This fourplex is valued, as you can see, this is a copy of my contract that I signed, $775,000, fourplex in San Antonio, Texas, is like 3-bedroom, 2-bath, townhomes style units. It rents for $1,500 per door, and it's like 5,200 square foot, located in a very good, investment market in San Antonio. Cash flow properties. You put 25% down payment for Fannie Mae residential financing on this fourplex, and ideal interest rate, whatever, 4% or slightly higher. We crunch the numbers, it'll cash flow at 25% down payment. So all the numbers make sense, but that's not what I'm trying to say. I'm trying to say is there are several exit strategies, if you will, associated with this strategy. Again, you buy the lot with how it's going to be built. So in this lot I just purchased for earnest deposit of $5,000 down payment. Now to reserve the lot, right? You lock in the price at $775K, and then you allow the builder to complete construction, finish the house, finish this structure, this building. In this day and age, with the COVID-19 situation, with everything, with the supply issues and associated with new builds, it'll take probably 7 to 10 months to finish building this house. Meanwhile, lock in at this purchase price, then presumably I'm gonna have a walk-in equity, right? So let me show you the scenario. 2 months ago, I bought it as a lock in the price. There's no escalation clause at $775K, and then a couple of weeks ago, the builder decided to increase the price of this fourplex. There are, I don't know exactly how many fourplexes in this community, 30 or 40. Oh, by the way, they are probably all sold out, in case you want to do any further research, because any kind of homes, single family homes or duplex or fourplex in rising markets in places like Texas and Florida, they go quick, right? These homes get sold out within few days. We're talking 30 or 40 of these fourplex pre-construction lots. Anyway, so the builder increased the price, as you can see right here, right, to $899K. So what does that mean? That means, within a couple of weeks, I lock in the price of $775K. Do the math. $899 minus $775. On paper, the value of my lot, it's not a house yet, have increased by 120 something thousand dollars. It's on paper, all right? So bear with me. So here's what I'm trying to say. And then, surprise, 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 another commercial 4-unit, similar floor plan, few miles away from our actual location. Another development, another builder has listed their price a few miles away for $925K, a few miles away, right? So you can do the neighborhood comp, right? And I know the picture might look a little bit different from the rendering drawing that you saw on the previous slide, but trust me, it's the same floor plan, 5,200 square foot, same kind of design interior. So, and it was sold recently as well. Some investor bought this for $925K. So in a mere 1 month from the time that I locked into my purchase contract at $775K, now it's at $925K. So as you know, so really you could make the argument that right now I have a paper profit of $925 minus $775K. Do the number, what is it? What's the actual gain on paper? $150K. So think about it. So when my house, my building gets completed toward the end of this year, who's to say somewhere along the way in this 5 or 10 mile radius, some other fourplex similar in floor plan may increase in value because of the rising prices of, you know, all the great locations throughout the US, right? So who's to say that when my house gets completed, my fourplex gets completed, that the price will not be $950, maybe $975K? How about $1 million? I don't know. It's all guessing. I don't care. So it'll be at least $925K, right? 9 to 10 months from now, when my building gets completed, then I'll open up escrow, pay my 25% down payment or more, and then, you know, normally, you know, we promote the aspect where we buy and hold forever, right? We close escrow, then use the local property management to rent the house or this fourplex, and this should be very easy to rent at $1,500 rent, maybe even higher than $1,500 per door. We're talking, you know, 3-bedroom, 2-bath, each unit, townhouse style, like 1,300 square foot each unit. Isn't it amazing? Someone, because of the acceleration of rent, the rent inflation, we've been hearing about that, record rent being raised all over the country, 20, 30% rental increases. Who's to say my projection $1,500 rent is not going to be increased to $1,600 or $1,625 or something like that, right? Clearly at 25% down payment or more, the cash flow would be very attractive. But what if I decided to, when the house gets finished constructing toward the end of this year, somewhere along the fourth quarter of 2022, I could sell the house upon closing of escrow. Think about that. If I do that, let's assume in a very conservative way, the house closed at 25K, right? Let's make that assumption for discussion purposes. So I lock in the price at $775K, right? Back in January of 2022. Now is November, December. The house is finished. I do my loan, close escrow at $925K, right? So $925K minus $775. What is it? 150K. So if I were to sell, yes, I can sell it because this is an investment property. The builder doesn't care. This is an investment property. I can do whatever I want with it, you know. So if I make a decision to flip this property, so I have a paper profit 150,000 minus is it 150,000? Let me do one. Yeah, minus closing costs, minus risk commissions and a few other expenses. You know, instead of 150K minus like maybe $30,000 of selling costs, 130K. Then, in case you do not know, when you sell your investment asset within a year or less, you are subject to capital gains tax. In this case, a tax rate at your ordinary tax bracket. So we pretty hefty, right? I mean, of course, I'm not a tax accountant, I'm not a CPA, but yeah, but when you flip any kind of property with under a year of holding, you have to pay a tax on the selling of your asset. So if you are in a 31% federal tax bracket, you have to, you could need to take a haircut of 31%. If you're in a lower tax bracket, you may have to pay the federal tax bracket 25%. So you can get another 25% or 30% cut from my 130K of net profit. Yeah, that'll come up to whatever. Then I still walk away, even with the capital gain tax I have to pay and the closing costs and the risk commission. The net profit could be close to 100 grand. That's a nice chunk of money, right? For only less than a year of and I'm only putting 25% down payment, whatever. So it's better than flipping, yes. But by the way, my recommendation for investors, whether they buy single family investment home or multi-unit, you need to buy and hold forever, because you're collecting rent, you're getting cash flow, so you have passive income over time. When you rent out multiple doors to tenants, so tenants, you know what I'm saying? So yeah, you can flip it, but I prefer to buy and hold, not flip it. Some people might still want to flip. Right, you walk away with 100 grand net profit. Well, that's a nice chunk of change for only putting a little bit of earnest money deposit. So you know what I'm getting at now. So what I'm trying to say is, the rest of you out there, you may not be able to afford to buy a fourplex in a way I just did it. You might want to do it in a smaller scale, for example. But at the same time, that's how it's done. You can buy single family home, new construction. You can get into a phase one, and then you pay your earnest deposit. Could be 5 grand, could be $30,000 earnest deposit, depending on the builder, as an investor. So you buy a new construction, new build, something we've been promoting for many, many years. Except now, because of the cost of construction, supply chain disruptions, and the lumber prices has been skyrocketing in the past couple of years during this pandemic. You all been hearing about that, right? So builders are raising their prices exponentially from the time they release the lot to be purchased until the completion of the house. Sometimes it takes a year or even longer for the house to be completed for all the challenges I just discussed. Does that make sense so far? So our network, our company has been promoting investors to buy new builds for many, many years now. And oftentimes when you reserve the lot to be built on a house, you locked in at the purchase price, you pay your earnest deposit money, whatever, then you wait until the builder construct the house and everything else. And then when they finish completion, then you open up escrow, then you do your financing, whatever you need to do, or you pay all cash, whatever the case may be. Then as an investor, then you hold the property long-term. You get a renter in to achieve cash flow and have a local property management to manage your property in different locations. We've been doing this for years in many, many different markets, mostly South and Southeast, just so you know. Right, so some of you are thinking, wow, here's the challenges, right? I mean, you have to find a builder that willing to build the single family home, the kind of single family home that you can buy pre-construction, or or cookie cutter homes, hopefully around 230K, 250K minimum price on the single family home residential investing, to as high as 350K, right? That is the max price range, because the rent you're gonna get are kind of maxed out at $2,500, monthly gross rent. So anyway, you know what I'm saying? So single family home, the price range in the mid 200s to mid 300, because the rent you charge at 20 to 25% down payment, you will achieve cash flow. That is the rent to value ratio end capitalization rate has to be at least 5%, cash on cash return 10 to 15%. But I'm not going to go on the numerical analysis and what have you. Now, if you are investor, if you do not have a connection like we do here at the Yee Real Estate Network, if you are on your own, try to buy new construction homes in different part of the country, your chances of achieving success is slim to none. Why? Because most builders in the country, when they build the new homes, they are offering mainly to owner occupants, primary homeowners to buy these properties, right? And as we know right now, it's very, very difficult. The builders throughout the country, they are having a lot of challenges with all the delays because of the pandemic. We all been hearing about that, right? And even if you can find a new construction to buy as an investor, most builders, nationwide builders, they do not accept investors. They're not going to allow you to buy their new construction homes. They are mainly for owner occupied buyers. Furthermore, the Wall Street hedge funds, the Black Knight of this world and other, Wall Street hedge funds, they are building new construction homes to rent it out, built to rent business model. Have you heard about that? Anyway, furthermore, most builders, they do not profit from building small entry-level homes. They rather build homes that cost anywhere from $500,000 to $1 million or more. That's where they make the money. That's where the profit margin is occurring. Do you understand what I'm saying? And even if you can find a single-family home, new construction as an investor in one of these markets in Texas, Florida, or Georgia, or North Carolina, wherever, again, some may allow a small percentage of their new pre-construction homes, the lots. You're going to buy the lot, you have to pay for the lot. They do not allow investors. So the bottom line is, our organization, we have a relationship because we've been in those markets throughout South and Southeast. We have such a strong relationship with the local builders in those markets. We are able to negotiate, and those builders, they allocate some of their homes, 250, 350K, to our network investors, right? For example, if they have 300 homes in a particular community of $300,000 or whatever, or 300 homes, they allocate 5 or 10 homes to our investors for investment purposes. Because we have a long-term relationship, our team on the ground has been, helping our investors to buy remotely, passively, in many areas of the country throughout the years. Okay, so anyway, so that's the power of the network that we're able to help the few investors that we have on our network to have the opportunity to buy these low entry-level homes where we can rent it out ultimately, and where you can achieve, we call it walk-in equity, right? You lock in the price at the beginning when you reserve the lot, then you wait as long as it's necessary for the builder to finish constructing. The longer they take, when you buy in the phase one, in the next 6 to 9 months to a year when the house is completed, the builder have a tendency to raise prices on their new builds within their community, right? So that's the bottom line. So that's the beauty. Again, if you, most home builders, they if on your own, if you pretend that you are owner occupant and you buy a builder's pre-construction homes with no intention of living at those homes because you're for real as an investor, that is when the house is completed and you close escrow on the house and you try to rent it out, the builder is gonna find out that you did not buy their house for owner occupant purposes, that's a fraudulent transaction. You can go to jail for that, right? And they will find out. I say it again, most builders, when they build those new homes throughout the country, not just right now, over the years, they only allow owner occupant, right? You have to live there for them to allow. But if you're investor, they don't allow you to do that. Except they do not allow investors, except when you work through our sources, our network, where we have a good relationship with those local builders in different parts of the country, where they know that we have investors that want to buy some of their new construction homes in their community. And if your intent is there, if you can buy those homes as an investor and they know it, right? Because they trust our network, then you're okay. You can do whatever. You can flip the home if you want when the house is finished, assuming you've done your number crunching and you can achieve profit. You can do that, but so that's all I have to say, right? So there you go. I mean, I'm not saying you can make the huge amount of profit that I make on my fourplex, but on a smaller scale, you can buy these new builds where investors are allowed to enter. You can reserve the lot, and we have various locations throughout the U.S. We can do that mainly in Florida and in Texas and a few other places. But if you want to find out more, you join our free network, become one of our free members, enter our website, yeerealestaternetwork.com, and put your email on your database, and you'll officially become our member. Then you could use our in-house resources, look at the opportunities we sent to you. Then if you want to reach out through our network to buy these great new construction homes, reserve the lot, wait until house is complete. Then you can have yourself a great new construction homes to invest for long term. You're gonna put a tenant in place to pay down your mortgages for you. And most importantly of all, over time, because you bought a new home, maintenance issues will be very minimal, right? I mean, it'll be a long time before you can need to replace the roof. Your maintenance issue could be very, very bare minimal. You're gonna get into a high quality tenant that are willing to pay your rent to live just nice new house. What more can you ask for? I mean, that's hassle-free, stress-free, new rental homes for you to achieve your real estate wealth by buying as a rental. All right. Hopefully that helps you with this strategy. Thank you so much. This is Seewing Yee, and look forward to helping you to achieve your real estate investment goal with new construction, amazing investment asset class for investors. Thank you so much. This is Seewing Yee from the Yee Real Estate Network. Goodbye.